Okay, this is Leif Soreide. I'm here with a special guest, Roy Mattox. He's the Chief Market Strategist and Portfolio Manager for Integrated Financial Strategies LLC. He is a top USIC, US Investing Championship competitor with a 214.4% return in 2021. And he placed second in the stock division, and just that he was that close to winning, very close. So welcome, Roy. It's good to see you.
Great to see you, Leif. It's a pleasure. I look forward to visiting tonight.
Yeah, and that's the great thing about this contest. It kind of brings everybody together, whether you're the top competitor or not. We're all in there. We're enjoying everybody's attempts at it. Everybody's learning a lot. And Roy reached out and we visited with your son, and we had a really long conversation. It could have gone on forever. We bring up a stock chart. I think we got lost. So I have more questions than answers even after that hour and a half we were talking or something. So just to get into it, basically, just tell us a little bit about your backstory and how you got started trading, and then we'll get into some more advanced concepts and how you look at things and see what we can learn from you and introduce you to everybody on finance Twitter and the community here. So
sounds great. Well, I had an inauspicious beginning in October of 1987. That's when I actually started my career, the week after the crash. So it's sort of funny that day reminds me of pretty much what happened today. The parallels are uncanny there in terms of the top in 87, the crash, and then what happened subsequently afterwards. But I became really a student and became passionate about the market after meeting David Ryan and William O'Neill. And of course, they're famous for the book, How to Make Money in Stocks by William O'Neill, the Can Slam methodology.
Yeah, absolutely. So that would be maybe say, who do you trade the most like? I mean, obviously you say O'Neill style, and you have other influences, of course.
It's really interesting because, an investment strategy should be comprised and composed of several different structures. And I look at it from the standpoint, you should have a process that considers the technical factors, the fundamental factors, and then the macro environment. And really, I look at those three stools of the process. I think those three stools are very important in terms of conceptualizing, a proper investment strategy. But we'll talk about that from a short-term standpoint and a long-term standpoint as we go through the interview.
Okay, so that's kind of the main book where it kind of, where did you start? What made you want to start trading? This kind of, so people can kind of identify with, maybe your story and see themselves perhaps or something.
Well, sure. Well, I grew up in a small country town in Louisiana, went to LSU, go Tigers, and worked offshore for about 4 or 5 years, paid my way through school, worked for Shell, and excuse me, I had a call coming in. And then I found that I really didn't like the oil field business in terms of working offshore. And so I went back and got an MBA. And after I got my MBA, I became an analyst for a major bank in Houston, Texas. That's where I began my career. And while I was at the bank, I was involved in the capital markets area. And so that's really where I began the passion and the love for the markets. Mm-hmm. An MBA does not equip you with all the necessary tools to really make money in the market. It just gives you a background.
Yeah, I have one too. Believe me, it doesn't. You're 100% right on that.
And maybe they've changed the program now, but that was 30 years ago when I received my MBA. All I know back then is we were involved with value investing and how do you determine the stock's value by its discounted cash flow values and so forth. And that really didn't appeal to me. And when I just got into business, I actually met with the manager of the firm that I was working with, and I told him that I was interested in stocks, and he set me up with the guy that knew stocks the best in our office. And I came out of that meeting and saying, man, if this is the best that you have to offer, I want to learn about stocks, because he couldn't articulate a strategy. And after I met David Ryan, David kept winning the U.S. Investment Championship in the 1980s, probably 85, 86, 87, with a 150% return. And I said, I want to find out what this guy is doing. So that's really how I began.
Yeah, a lot of his stuff really is, he simplifies it and talks about down sideways drift to the right before the move and stuff like. I mean, all the little things he says. High concepts put simply. I mean, it means you really understand it, and it's always cool to hear that kind of stuff from him.
It just resonated, and it provided you with a venue of making an unlimited amount of money based on your skill and expertise and the execution of your strategy. And I became a subscriber 30 years ago to Daily Graphs and the newspaper IBD. And I've been practicing those techniques personally for 35 years now.
Wow. Okay. So what made you want to join the contest? I mean, everybody's excited about your win and wants to know, how you felt during it, what made you join perhaps, and, what it was like trying to keep up with everybody the whole time. And you really were in the lead for a while, I think, too, right? So.
Yeah, it was. In fact, I was called the last week. If I just would have stayed in cash, I would have won the darn thing. So that was frustrating. But I really wanted to prove to myself that I could do it. My son Wesley is joining me next month as a co-portfolio manager. And a year ago, I thought that would be great if I won. That might help us with our marketing initiatives and so forth. But I've got to tell you, it was a grind. It was the hardest triple-digit year I've ever had because you just couldn't get any traction. You couldn't get any traction, and all the trades were really 1 to 3 to 5 days. It's not the way that I want to trade. It's not the way that I invest. But that's the environment that we were posed with last year. Right.
I mean, you got to trade with what you get, right? I mean, it's a very choppy year. So I won in 2019, and that was a year where I didn't even trade for a good part of the year, and was only able to get it going for 2 months at the end and in some of the beginning, without kind of day trading tricks in between and just kind of leaving it alone. But I mean, that was that year. What year would you say this 2021 was most like for you? I mean, in the past, trading wise.
And really 15 and 16, because 2021, we had a year where the averages outperformed, but growth peaked in February. So we were in a bear market. And how do I determine and distinguish, if we're in a bear market or not? I use the FFTY, the IBD 50. That's my benchmark. And that peaked in February. And as of today, that index was down 30% from the November high. And we'll look through a few charts to look how bad it's been from a breadth perspective, but you just couldn't make any money from a trend perspective, unless you owned the QQQ and the S&P 500 this year. It was very odd, very unusual, very difficult, because I'm really looking for the stocks that change the way we live, work, and play. Those are growth companies, and those sadly disappointed in 2021 just across the board.
Yeah, I mean, I saw the same thing. I have my own signal. Red signal went red in February. Briefly got on some better signals, but you're having the overall difficulty. That's the way I rate it, right? I mean, when you have the breadth, going away, that's what we saw all year in the Nasdaq. And I look at the IWO quite a bit. That just kind of went sideways, suspiciously sideways. You know what I mean? Until false breakout and I went short it. So, you know what I mean? So that was a tough year. And for you to put that kind of return up, we need to learn from you. So this is what we're trying to do. We want to see, what you have for us, and maybe some of the way you take a look at the market overall would be, and I've already seen some of this on Twitter, very, very great stuff. And, it feels like we've been trading around you already. So, we like some of that. So whatever, maybe you could pull up some charts and let us see some stuff here.
Yeah, let me say also that the environment, I mean, you know, Mark Minervini won the contest in his category with an astounding, shattering return.
Mhm.
And, you know, what makes Mark so good, so great is his consistency trading that VCP pattern, you know, just the volume contraction pattern.
Sure.
And, you know, it was, I mean, to his credit, that was a marvelous exercise in his skill set. So congratulations to Mark as well.
Yeah, absolutely. Congrats, Mark. It was a amazing year to do that, and he's doing more short-term trading on. He's done some speaking on that, so it's very interesting stuff.
So let me share my screen with you, and let me pull up just a couple of things. Let me pull up a couple of items, Leif.
Yeah, and Pavel is the guy that actually won your division, but he doesn't do any kind of media or anything. So that's what he told me. So.
Oh, really? Yeah.
Yeah. So we won't learn too much from him, maybe, but we'll hopefully in the future we'll see what he's got.
That sounds great. Okay, what are you looking at right now, Leif, on your screen?
Yeah, I see your stock charts there. So yeah, I see that.
Okay, fantastic. What I wanted to go through, just a few of these charts so we can sort of take a look. What I found over my career, and this is from really 2000, we had to blow up the internet move, and I'll give you a little bit of background. I started with a couple of $100 grand in 1998, ran it up to $1 million, blew up, ran it all the way back down to 100,000 in 1998 in the bear market that we had. I was in companies, the right companies, but I didn't have any sell discipline back then. And I ran the account up to about 4 to 5 million at the 2000 top, and then just got scissored because I was on margin, and a lot of these internet stocks pulled back 25%. My account dropped 50%. Then I had to pay a couple $1 million in taxes. I'm starting over again. So after that, I went back and studied that period of time, and I went back and tried to put in some fail-safe mechanisms. And I came up with just really some moving average tricks that were very important. Mm-hmm. From a short-term perspective, I found that when the market is topping and you have many days of distribution at the market top, you have a cluster of distribution days in the market top, but the leading stocks peak first, and then the technicals peak really simultaneously with that. And by the technicals, I'm talking about indicators such as the moving average divergence indicator, the relative strength index, stochastics, and then finally the trend turns over. And I use it's an offshoot from really Stan Weinstein's material, and we've all read his book. I think you featured his book before in some of your webinars.
Yeah, trend following. I mean, he's the kind of the Bible for trend following in general, I suppose, right? I mean, it's a great book.
And I'm a trend follower.
Yeah.
You know, although I've read, you know, all the books, you know, Reminiscences of a Stock Operator, Darvis, How I Made $2 Million, Gerald Loeb's The Battle for Investment Survival. I mean, we've read all the same books, but, you know, Stan Weinstein's book is, it's very useful even today because he keeps you on the right side of the trend. And the way that I measure that and look at that, I'm looking at, I'm using a 10-day ESA, a moving average, exponential moving average, and then a 21-day exponential moving average, and a 50-day simple, and then the 200-day simple. And when the 10-day crosses below the 21-day, very simply, the market or that individual stock is in a downtrend. And I don't like to buy stocks or buy when the market's in a downtrend. I like to see when the market turns, and either once we have a correction, I'd like to see the averages turn back up, or we have a follow-through day. So really sort of, that's sort of what we're waiting for right now, Leif. Wouldn't you agree?
Yeah, I mean, you definitely need a follow through day because, I mean, you know, the setups, the stocks, there's really nothing to trade coming out of basis correctly, right? I mean, it's a little sloppy, everything. You might find some, you know, I'm looking at a corn, like some agricultural stuff is setting up, but otherwise, I think we're all out of position. So there's really, you know, maybe some trucking. I mean, I could find a few, and that's the thing. Maybe I'm too good at finding the setups, but you never know which ones are going to work, and they don't work that great when you're so far out of position, unless you pick the bottom correctly, which is very hard to do, right?
It is. And,
Yeah.
if you're waiting for a follow through day, you will never get the absolute bottom, but yet, you will limit your downside, that's kept you out. That's kept you out of the market for the last 2 weeks when we've had really devastation and a crash in
Yeah.
not just growth stocks, but, many large cap stocks as well.
Yeah. Just the difficulty even getting them to hold the trend is tough. That turns my signal by itself, so
Right. So no, what's interesting, we have this key reversal day, and the NASDAQ was down 600 points at the bottom. We closed up 86 points at the top.
Yeah.
So, if you're very, very aggressive, you could have played that bottom right there, but I tend to want to wait in terms of to be sure that the trend has changed. And I didn't want to get in front of the Fed meeting on Wednesday because I think that, of course, that could move the market one way or another. So it remains to be seen if this is a low, but we did have a lot of sentiment indicators that flashed by today, but this isn't the way that you want to approach it. It's not the lowest price that's the best. It's the best setup for to set you up and where you have the highest probability of making money, and that's when you have a follow-through day. So Here's the NASDAQ, and you can see that the momentum has really been waning since that November top, and we had that big reversal in November, and you can see where the momentum is clearly rolled over from the November top into now on the NASDAQ.
So are you also reading the volume on here, or just kind of MACD and the moving averages is your main thing?
I'm not on this chart. I'm just looking at the crossovers where we're obviously in a sell position on the MACD right now.
Very, very oversold in your eyes, I would say.
Yes,
Yeah.
and the RSI, you can see the RSI, the relative strength indicator. You can see that we're as oversold as we've been the entire year. That's an RSI indicator.
Right.
Now, it doesn't matter how oversold it is. Remember, that's just to give you an idea of the weakness in the market. The most dangerous markets are those that are oversold, that continue to go oversold. So this is the type of market that could lead to, a very significant drop even from here if the Fed news is not viewed positively.
Yeah.
And the market rolls over. So, and I call those days Kaiser Soze days. Those are reversals of reversal. For example, while it looks as if we had a key reversal day today, if we reverse and take out this low today, the market will come under a huge distribution. There will be panic in the streets if that happens.
Yeah. So, I mean, there was huge volume on the indices today. Does that mean maybe since they didn't take out Friday's high, do you think they ran out of juice maybe, or what? How do you read it?
I think that's possible. I think I think that that is certainly possible.
I actually haven't, because we haven't. I don't have updated volume, but I think it was elevated. So we'll see what it is later, because I don't see it on the chart yet.
Yeah, I have to. I go to the IBD site and check it out after the close, and I wasn't able to check out the volume today, but I know it was elevated. I don't know how much. So it was elevated. This is a blow up of that crossover that I'm telling you, so you can clearly see where the trend is down. Now, I have a lot of examples, Lee, from the 87 top, the 1998 top, the 2000 top, 2007 top, 2020 top, and the recent top. And in every case, the market doesn't crash from a 52-week high. You have time to, that moves you out. Remember in 87, what the market peaked in August, right? And then crashed in October.
October 15th. Yeah. I think that's when, that's when it went below the 200-day, and then 16th and 17th were the prior 2 days.
And
it went straight down. Yeah.
And the 17th was Monday, I believe.
Yeah, I think so. Yeah, that was the big.
That was the day. That was the day that I left the bank and joined my brokerage firm. So that was it was difficult at that particular time, being a rookie in the business, to generate business. I had no idea what was going on back then.
There might have been a lot of job openings after that crash, maybe, huh?
I just hung on for a year before I figured out how to read the market.
Yeah, that's good.
Okay, take another thing. So this is I find this really interesting as well, the NASDAQ composite, and this shows you the breadth of the market. And now this isn't, as you know, I know you use these charts as well. This isn't updated yet, so this is going to be lower than the 16.8 area. And this shows you how that 85% of stocks are below, and the NASDAQ are below their 200-day, and certainly they're in a bear market. So, other than Microsoft, Google, Amazon, Apple, Tesla, and NVIDIA, most stocks have gone down in the NASDAQ, over the past year, and we're getting to a washed out area. We got to I believe to the 10% area in the pandemic low. But if we look at this, you change this from a weekly, if you can change this to a weekly and go, say, 3 years out, and then update this, so you can see that we're approaching levels that we haven't seen in 3 years.
Yeah,
so it just shows you the devastation that's been going on in the market. So you have there are two ways of playing this. You can buy the stocks that are heavily oversold for a bounce, and that would be the semiconductor stocks and the tech stocks and the high price to sell stocks, the stocks that are overvalued. Those are the ones that were up the most, but those have the most downside as well, and that's why they rallied the most, because this is really a short covering rally that we're experiencing right now that might end in 1 day, 2 days, 3 days. But if you follow William O'Neill's principles, this is day one of an attempted rally, and they will be talking about it tonight in the newspaper. That means the earliest that we could have a follow-through day would be Thursday. So that's a day in which the averages are up. One of the averages is up 1.2% or higher on higher volume than the day before. And what I wanted to do is I wanted to look at really my go-to screen. And Jim Ropel has he invests using this technique many times. Ropel takes positions of about 17% in a position, and about 90% of his winners have had the following criteria. Now, I don't know how he defines it. This is how I define it. As I've observed all these winners before in past years, I'd like to see stocks, and what I'm looking for are stocks that go up 10% in price and volumes up 300%. So the setup on Fastly, and I traded all these stocks. So let me pull this up. 0507, and this was in 2020. And there's your setup right here. So there's your setup when the stock traded up 45% in price and the volume was up 620%. I bought this stock that day.
So earnings gappers are your kind of go-to play.
They are.
So walk us through the mechanics on that. How do you buy it? What's the stop loss? And all that kind of stuff.
You've got to be watching these stocks. They're catalysts, and you've got to be, and they're typically earnings catalysts. You've got to be watching these stocks, Leif, after the market closes. You've got to be doing your homework at night, because they'll show up, and you've got to be, if they report after the close, you'll see them. You've got to be there before the opening so that you can see them if they report earnings on the open. But the ones that I'm going to show you, they were all earnings. They had to do with earnings. And you might think that the stock is not in a Bible area when it's up 45%, but that was a $30 stock that went up, that tripled in 2 months. So that stock went under powerful accumulation over just the course of 2 months. And you only need a few of these to make your year. So let me show you a couple of these. So there's Fastly.
Yeah, a lot of guys in the 2020 contest traded exactly that spot, actually, on that chart.
Of course, and just like last year, it was Teladoc and Zoom, right?
Yeah.
So let me change the date here, 07/25/2013. There's your buy point on Facebook. Now, this is I know that you're very familiar with Kathy Donnelly's work and Eve Bobick as well. And of course, she's written the book, The Life Cycle Trade. And this is where I think patterns like this, we're going to get some of these. And you and I were talking about, for example, like Airbnb and other, IPOs that just need seasoning and just need time. And this is the Facebook analogy, where Facebook went straight down, based for a year. They weren't making money. They weren't monetizing their subscribership. And then they started monetizing their subscribership and advertising. And with an earnings surprise, the stock broke out of a base, traded volume up 749%, the highest volume in history. The stock was up 29% that day.
Right.
So you had to be looking at that. So the stock was $30.
So you're playing the momentum on the earnings gap, and you're betting that they're going to continue to buy it because they all got caught off sides, perhaps. Or what is your thinking behind that?
Finally, the due diligence phase is over right there, in my view, and the institutions are piling in, and companies like Vanguard and Fidelity, those Fidelity managers are buying it hand over fist. And that momentum can last longer than you think that it can last. And there's a stock where you've got a triple-digit return, within the year. Square was a big one back in 2017. And so, Leif, I'm watching for these stocks. That's the setup that I'm watching for right now, because we don't know who the leaders were. We thought energy stocks were presumably the leaders, but they just rode over in the last couple of days. Every single group that's expanded. We were looking at trucking before, that was holding up. The banks were holding up until JP Morgan blew up, and the energy stocks were holding up. Should you play the commodity stocks? The market is in disarray currently.
So this is one of my key questions: is how do you define and how do you find leaders? And you're looking for the large earnings gaps that says, this is the potential new leadership.
I am. And so it's going to be, really, I don't see anything that's viable there. You don't have any stocks. Very few stocks are in that volatility contraction patterns that I'm seeing that are setting up. Actually, gold looks great, GLD. But, other than that, I don't have anything that I see that's worth buying. But this is of course, this was a Square. This was Square back in 2017, and notice the choppiness. So we might be in a period of time where we just simply come in, go through a bear market, go sideways for 6 months until finally you have some of these companies that exert their leadership by demonstrating they're breaking out to new highs on volume. And this was a big one. So this was you had to wait for a year before it finally broke out. But then when it broke out, Leif, and this is a game changer. So it broke out at 17, and remember it was up 14% that day. Volume was up 766%. That, there's your year right there. You only need one of these true market leaders to really, to move the needle. If you're willing to concentrate 10 to 20% in a position, which I'm willing to do that when the market environment's right. So this is a perfect example of everything that's going right. But this was after 2015 and 2016, the choppy environment, so we've got to get through this, choppy environment currently before any of these show up. And I guess the last two. So
does that mean like you want to go into that space in that industry group? When you see that too, when you see a square go up, you look to maybe even PayPal and the other ones, right? I mean, is that something you would do?
Yeah, the stocks are going to bring you to the industry group. There's going to be one or two. Typically, there's going to be one or two leaders in the group. And you don't need to have 4 or 5 in the group. You just need to have the one to two leaders. Perfect example is, of course, we all know that, if you name two top beverages, what would you name? It would be Coca-Cola and then Pepsi. And then, down the line, those would not be considered leaders. So normally you can find the first two. And how do you determine who the leader is in the group? It's the one that breaks out and has the highest relative strength. It's the one that's moved out the first. So let me change this. So change this back to a year ago. And here's the breakout. Actually, this is when Zoom broke out back here at 78. And so that was the huge winner back in 2021. That was very, very choppy, but this was, I don't think I ended up buying this stock until probably was at 150 or so, like maybe back in here before I got on the stock, but it had the same characteristics. Look at the volume when it broke out, 36 million shares, on big volume. So this had a lot of the characteristics of big, winning stocks. And again, a big winner last year or a year ago was TDOC. So TDOC broke out back here at the 70 area and, went to $250 before it peaked and then rolled over.
That had the tight area or maybe VCP or something like that I would probably trade back there because I don't do the earnings gaps, but there's always something to learn from that too. So even if you don't trade it, you can get a clue, right? I mean, that's the thing.
Yeah, wouldn't you agree right in here, the low 80s when it was going sideways and then
really nice.
And there's the breakout. So
notice,
see the leaders, as we know, they're not going to come from, I mean, maybe an upstart will rebound. Maybe a firm will rebound from this devastating correction. But the leaders are typically going to come. They're going to be within 25% of their 52-week high right now, and they're going to be in a stage 2 uptrend. So there's going to be huge oversold bounces in technology stocks, but that's old merchandise. That's yesterday's news.
Right.
But what is interesting, if you take a stock like Tesla, for example, and if you go back and you look at this is the 2020 bottom right here, see, on Tesla, way back here. Now, this is a stock that had moved into prime. It was a leader, moved into prime buying territory, $70 to $200. And it corrected from $198 all the way to $70. So rarely do you have a leader that corrects that vigorously and drops. That's a staggering amount where, it dropped 60% before it bottomed. And then it turned out that it was a buy at the 200-day moving average.
Mhm.
So it was a buy at the 200-day moving average. And the reason that I profiled this is because I really never traded Tesla well at all. I tried 3 different times and got stopped out 3 different times. But that was a life-changing move if you would have bought it at 70 and it, moved to 500 in 6 or 7 months. Right there, that move was life-changing. Then it corrected again, and then you had another life-changing move. You had a couple of opportunities to buy it. But Tesla was one of the biggest winners from the 2020 bottom, and it was from a very oversold condition. The other 2 big winners from that 2020 bottom, and that's why it's important to study these to see if there's going to, if we'll see what happens with Upstart and AFRM and a lot of these stocks that are richly valued. We'll see if they'll come back. This is TDD that corrected from 323 to 136, and then you had to move from 136 to 970. That's a life-changing move. Yeah, you probably traded this when Leif did you not?
I've traded. I actually sold that right at the top there. This is one of my lucky top ticks actually, and then it set up again, but everything else was falling apart and I didn't take it, so it was exactly right there at that spot.
And notice at the 2020 bottom how the March 2020 bottom, it looked horrible. Now this is a perfect example, and actually Ross Haber wrote the book. He's got the book with the models of the market leaders the last 3 years, I believe.
Yeah.
And he shows a number of these setups, but this is what we're looking for. You're looking for a rally right now in a number of these stocks, a rally off the bottom, a comeback and a retest of the bottom over time, and they set up a base and then it breaks out. So you're talking about potentially a month that's going to take a month that, at least that we might need for new bases to form. A base, needs to be between 4 and 6 weeks, typically 5 and 7 weeks. So we need time now after you get off the mat, and then it sets up, and this stock set up again.
Yeah.
And but
that's interesting. You say your base criteria. So you go as low as 4 weeks. I mean, in a high tight flag, I'll go that low. I mean, I typically look for 6 to 8 weeks, and
5 to 7 typically.
Okay.
5 to 7 typically, and those high tight flags. Those are, if they set up now, that's going to be high velocity trades when they show up after going through a market correction that we've had, and so they perhaps might be very, very meaningful and lucrative if we find these stocks that come out of bases, but more than likely they will be an earnings driven stock. And of course, this is Shopify from 300. Notice this corrected 50%. So typically, when you get a market correction, these growth stocks correct twice the market. And, now we see, I think I saw the statistic, I think yesterday, where 50% of all NASDAQ stocks were down 50%. So it's rare that you have this type of a correction. The ideal correction is, 20 to 25%, when you're putting in a cup and handle. And this is pretty extreme, but that's how washed out we were in terms of the breadth at the 2020 bottom. And the only reason that I'm pointing this out is that it's possible, but that's a very jagged. This was very difficult to trade. Just look at the volatility. Look how wide and loose it was.
Yeah.
Even when you got a threefold move, I wouldn't have been able to trade this.
A little bit like fastly at the top. It just gets, when it gets all crazy like that, I'm leaving the party on that one.
Exactly.
At least for the time being, till it sets up again.
And I was looking at some of these stocks to sort of determine the leadership. And this stock had a breakout on volume. This was an earnings. Let me see. This was an earnings move, right there where it tried to break out. Let me see if, let me make sure is this updated through today? There we go.
Yeah.
That's what I wanted to say. This was an earnings breakout, see right here. So I had my eyes on this one where it broke out, but so it broke out, you know, a 52-week high, great earnings on great volume. Institutions were buying it heavy, but the market environment was so negative that it failed. So company,
Right.
you know, companies like it's trying to show itself, and then the market environment's not conducive.
So there's a certain market environment where you would probably have tried that.
Absolutely. Yeah, absolutely. In fact, I tried it personally on day 2 on the reversal and got stopped out the following day.
Okay.
And so I did dip my toe in and immediately got stopped out. And you know, I normally don't like to see these stocks come in really the day of the Bible gap up, you know, that day, but the market environment was so choppy and volatile. And then I saw it, you know, with a very, very good, you know, close. And that's why I put it on, like, okay, thinking that maybe, is this going to be the first one out of the chute? And it was not, it failed.
Okay. So anything about the technique that you could get into, like, so somebody could learn how to do that, maybe?
I think, you know, it's really an educated guess based on volume and if they're currently working or not. And these are not currently working. What's going to be difficult is that when they start working, you're going to have 1 or 2 of these that start to work that tell you the coast is clear, and we don't have any of that yet. But I am watching, you know, these earnings reports. I'm watching these earnings reports. So, you know, this 10-300, you can find it. And actually, I run a screen on it. Leif, let me see my screener. So I run some screens, and here it is, up 10% in price, volume up 300%.
Okay.
And today there were 2 companies, Kohl's, which is a buyout candidate. So you've got to toss that out. That doesn't work. And then a biotech stock that I never watch the biotech stocks, but I run the screen every day to see those that are up 10% in price, volume is up 300%, because these things come out of nowhere. You know, you may not be following the stock, and then they come out of nowhere.
You got to be ready for those earnings gappers, and they give you all the clues that you're looking for leadership and other things.
Yeah, this is one that's really got my attention. So, and again, you know, any of these stocks that we're talking about, you know, these aren't any buy recommendations. You've got to do your own due diligence. This is just for educational purposes only. But this stock hit my screen, and I found it's going to come from earnings. And, you know, Live Nation is the entertainment firm that they really control most of the concerts across our country. And this is an earnings move where the stock broke out, volume's up 300%. There's a 10-300 Leif for you. Volume's up 15. Volume's up 300%. The price is up 15, but it's not ready because of the market environment.
Right, I got you.
But look at the revenue growth last quarter.
Wow.
And of course, they're going to be profitable in 2022. And of course, they're going to be profitable in 2023 as we open up the economy. This is where some of these big winners, and really look at this volume contraction here.
Yeah.
And now the stock's below the 50-day that you can see there because the market environment has been so poor the last few days. But, you know, if you look for this to come back above the 50-day and firm up, this might be an ideal candidate, candidate that can move from here. But I love the way, look how this stock has just gone sideways for a year.
Yeah, we like good bases. So do you have any stuff coming out of bases that you like, something, you know, kind of with a cup and handle or VCP to it or something like that?
I was watching Expedia, and this stock put in somewhat, and this is really sort of a cup and handle within within the fractal formation there. You've got
Right.
two sort of cup and handles, and now this stock has been going sideways in the last couple of days here. I think this is a stock that could do very, very well this year as the economy opens up. What I like about this, and see a lot of these formations, so you asked me, I don't see anything that's got a great formation that's not flawed, but so we need time for these to repair. But what I'm looking at the earnings for 2022, where earnings grow from $1.26 to $7.18, and earnings are going to be up 470%. Very strong. And as you look at these on the weekly and the monthly, this is just like one long base.
Right.
Decent relative strength of over 88. It's off the bottom, and I'm running a lot of earnings screens right now, Leif, to see what stocks are going to have earnings up 100% this year, because typically the stocks are going to move. There's that correlation between the stock price and the earnings acceleration, earnings estimates, and earnings beating expectations and raising expectations and so forth. But the pattern is flawed here, but it's definitely on my watch list. This is the Grayscale Bitcoin Trust that broke out in October of last year, and you had a massive move, and I traded this one as well. So you had a fourfold move in this one, and it actually peaked in January last year.
Yeah.
And and I believe Bitcoin was 10,000 at this particular time, where it broke out of this nice base, and it broke out on volume. So that was a nice.
So where would your buy points be for you personally? I mean, I'm seeing some kind of a lower pivot, a cheat maybe, and then a high sort of handle up there, and maybe two spots coming out of that cup. Where are you buying this?
Right here, you can see where now it's right here. That would be a low cheat right there, where it's the 10 days above the 21 day, and it's breaking above the 200 days simultaneously. And it's that low cheat where the cup is bottomed right there, and so there's your buy point. And then you can add, you can add taking out that buy point or that 1478 area to have your full position on right there. I normally put my entire position on, Leif, within like a day, if I'm right. And but I will average up, and for me, in my personal account, that would be a 10% position, where I would take it to a 20% position. I'm not looking to have personally more than 5 or 10 holdings, 5 or 10 holdings, and I'll use margin as well for for my clients. I won't take more than, I would take a 10% position in when the environment's right. I don't believe that I did that once last year, because the environment was never conducive for that. So most of us that are in the U.S. Investment Championship, we're traders. We might have investment dollars, and then we have trading dollars. So it's important for the audience to distinguish between that. I know Mark's results and my results were not achieved without sometimes having 400% leverage, in one stock, one or two stocks for the day. And you simply can't do that with other people's money. So there's a big distinction there. But you can have triple digit years with 10 holdings, if you have the right stocks. If you get a couple of these winners like Livongo and Teladoc and Zoom and Upstart and Affirm, and the market environment's friendly and you're concentrated, that's
Yeah, good
I
stuff.
think that's the appropriate way to look at it.
Yeah, how do you scale in too? I mean, how do you determine, so you start with your first position, say it's 10%. What kind of gains are you looking for before you go to the next one? Or is it market driven, or is it a combination? I mean, it's a little bit of art, obviously, right? But I mean, what is your formula?
I want it to be green. I want the position to be green. I'll never add to a losing position when I'm taking a concentrated position like that. But if it's green, I will. If it's green, and if it's green 3 to 5%, I have the full position. I'll move a stop to break even, and then and then let the market dictate whether or not I would sell the position or not. I know the environment that we had last year, many times in 3 to 5 days, I'm out of the position. We just didn't have a lot of stocks that, in fact.
Yeah, so you were doing shorter term trading in the contests from what you were.
Yeah, absolutely. Yeah. So would Gil Morales has a great book.
Yeah, from what we were saying, you have a lot of that style from him as well. So and he does a lot of shorting too. Do you do any shorting or no?
Not in the clients, but
not in the clients stuff.
Not in the clients, but I find this very useful. Let me show from a shorting perspective. Let me show you this. And the stocks that you want to short are the ones that are breaking down and have the poorest relative strength. Occasionally you'll get a nice setup. Tops take practice, and if you're looking for that head and shoulders top, where you're putting that right side of the shoulder in, where you can short the stock at the 50-day on the bounce of the 50-day, that sets up beautifully. But this is what I want. I think your users would find this really interesting as well. Is it the leading stocks, like particularly those that have the leading stocks, particularly those that have a high price to sales ratio, that its valuation doesn't matter until it matters, right? And it matters when everybody's exiting, everybody's running for the exits. And this is Marketsmith's visual display, so you can see the green 10-month moving average, and this is a 50-month. And it's interesting that you'll find that very rarely were stocks that break the 10-month that were prior market leaders, they don't go, very rarely will they not go to the 50-month. So I'm looking for downside objectives on a lot of these stocks, and I'll show you some of these examples just to show you how the environment changes, how a past true market leader rolls over and it becomes an afterthought. But you can see on Shopify, the 50-month is $644. If you take a look at a lot of these market leaders, there's PayPal. See where PayPal hit pretty much the 50-month, and notice where it broke the 10-month. 4 months ago at 260, and now it's 160. Yeah,
I'm still short some of this, by the way.
And I mean, they can go a lot lower than you might think. And let me see, look at ARKK, for example. So I wrote a little bit on Twitter about this, where I thought that it would go to 71, where it went to 65 today, and that was down 60%. Notice, of course, it was if you're looking at this, it was as a stock, the fund was a true market leader, rolled over. And that the last 2 months is when they really eviscerate you if you're long these stocks that don't have earnings. And it becomes painfully aware, if you've got these stocks that are true market leaders that roll over. Here's TDT that could actually go to 40, 38, 50 from 60. So if this market gets really, really hit from here, you're going to see these stocks that are highly valued. They have much lower they've got much lower objectives on the downside. The two obvious examples there, Leif, are Teladoc, and it wasn't, there's Teladoc from 300. Look at where it broke. See the 10 month way back here, almost a year ago.
Right. That's a good example. Yeah. So maybe big head and shoulders forming up too. We'll see what it does.
Look at that. Yeah. And look at that head and shoulders, shoulder, head, shoulder, and then the break. And now when you get these moves, when you get moves like this, you have no idea where the bottom is, and the high value, high velocity trade is presumably, over on the short side. It's too piggy, it's too obvious to short these stocks, now, but the environment is such that if we get bounces, a lot of these stocks are broken. If you get bounces up to resistance, they should be shorted again.
Yeah. That's what I'm looking for, is the bounce and roll in this downtrend, and they'll bounce it all the way down if it keeps going. So we'll have to see. But we're playing both sides. I mean, if the long side sets up, we'll play it.
And of course, there's EXPE. So you can see, true market leader, where you think that it's over, and then but the next leg downs, to 100. So, so it's going to take a little bit of time, Leif, it's going to take a little bit of time for these setups to show themselves. But, we're in a vicious market right now where, growth presumably is slowing. Hedge Eye Research, that's who I use from a macro perspective, and Keith McCullough is pointing out that GDP is probably going to drop from 7% to a 2% headline number, in the next quarter. And if you look at interest rates, the 10-year it peaked a week ago, but rates are lower. And how do you explain that rates are lower when the Fed's going to presumably raise 4 times? So that certainly means that probably the economy's slowing. And if the Fed, the Fed's behind the curve, we know that they're behind the curve, but the market's correcting us as well. If the market is doing what the Fed should have been doing, and if the Fed tightens while consumption declines, and we've got peak inflation, then this is the worst possible time that they should be raising interest rates. So that's why you got to be very careful. We could only be halfway of this correction. I mean, we definitely have had a bear market, in growth, and they can come and get the big dogs now. So you've got to be very, very careful here.
So how do you look at growth versus value? Like, a lot of the money switched to value, and I'm seeing Procter and Gamble shoot up. Maybe even Apple. Maybe they look at that as a value. I mean, how do you see it?
I think it's a defensive move, and I don't think you'll make any serious money. And I look at the consumer discretionary versus consumer non-discretionary. And the consumer discretionary companies like Procter and Gamble and Church and Dwight, the soaps and the defensive stocks, utilities, that's telling you that money's moving from technology to the safer areas. Right. But there's no true legs there. I mean, that could be, it could be very short term. You're not going to get rich in Procter and Gamble or a utility stock in Duke Energy, but you will get rich, in the right growth stock when the environment's right. If you're able to identify those.
So when are you looking for, or what signs are we looking for the next growth leg up, perhaps? I mean, what are you looking for?
I'm looking for a trend to take place. I'm looking for a trend to take place, but a change or a follow-through day to set us off. Now, in 2018, in the bear market in 2018, we had 2 follow-through days, 2 or 3 that failed before the legitimate one worked. Like, we had a follow-through day about a month or so ago, and I actually put on 30% exposure on the follow through day, but it failed the second day. Like it gave back everything, and I took a small loss and sold everything that I bought. And I think I put 3 stocks on ANET, Arista Networks. I think I put on Qualcomm and maybe Expedia. And all 3 of those immediately failed as well. But those were the ones that were on my screens that had the highest relative strength.
Right.
But what I didn't have is I don't have a recent earnings report. So I think, I mean, unless you're a high activity, high velocity trader, I think you need to just wait until some of these earnings reports come out. And I wouldn't hold one stock into the number, because we saw what happened with Netflix. You know, Netflix got crushed. And so what happens, by the way, if Tesla does that, if it's not a friendly number, and Tesla's been, of course, the glamour stock of the last 3 years. And, you know, if they have an unfriendly number, that's going to really hurt the market, I believe, and hurt growth.
Right.
So I'm waiting for the earnings seasons, and then I'm waiting for some volatility contraction patterns to just show up where things get tight. They're near their highs. They're, you know, the patterns aren't wide and loose. It's just not a snapback rally. The snapback rallies are so rewarding if you can get it, but you can't. I mean, you know, if you miss it, you're going to be in the fetal position, and I prefer not to be in the fetal position.
Right. So let's see. What about some advice for new traders? I mean, say they want to get started. Maybe they read how to make money in stocks. Now they want to get going. I mean, what do you recommend they do? What besides just reading the book?
I think, you know, you've got to open the account. You've got to trade with real money. You've got to trade with real money. What's important is that you learn from the right people. So, you know, noise has a way of changing your view. You got to make sure that you're not susceptible to news on CNBC from what those guys are saying. It's really important to have a methodology and a strategy so that you can do your research at night and put the positions on in the next day, and you have your buy stops and sell stops ahead of time, so you're not constantly whipping yourself around. But I think that, you know, what's great about the internet is we didn't have 30 years ago. I mean, I'm charting distribution days by hand when I'm looking at the charts. And now we have, you know, great, you know, you've got great people that you can follow on Twitter that legitimately are the best at their craft. And so you're going to have to put in a lot of time. I was talking to my son the other day, and if you look at all these great quarterbacks, you know, we've got the NFL season that's going on. One thing that's common to all these NFL quarterbacks is they're watching tape. Peyton Manning, he's watching tape. He was notorious for being in the tape room, you know, watching footage of every scenario. And I mean, I literally spend 10 hours a day, 10 hours a day studying charts, doing research, reading, trying to get ahead of things, trying to get your edge. So you're not going to be able to do this with 1 or 2 hours. You've got to be in love with it. You've got to be passionate about it. It's got to be, you know, one of the main focuses of your life if you want to be elite. So anyone can do it. You know, there's free, anyone can do it. It's free trading now, but for you to be elite, it's going to take time, energy, persistence, and acquisition of knowledge, a lot of mistakes, but you got to trade with real dollars, and you can get started with anything really these days. Yeah,
I just think that a lot of traders, they have a lot of problems that takes time to get over, like over trading when you shouldn't be trading. Like right now, if you think, you think the market's kind of off and you're waiting for the follow through day, most people that I'm watching making mistakes are over trading it, right? I mean, when you say like at some point you learn these lessons and you got to follow people that that do it correctly, right?
Yeah, that's
Right.
correct. And when when things are going great, that's the time to really press it. When things are really difficult, it's time to step back. But I think Leif, any trader that's been doing this for a long period of time, like for 10 or 20 years, that's one of the primary battles that we all struggle with, because you always see an opportunity. So you have to decide what type of companies you want to buy, what kind of companies you want to buy, what kind of setups do you want to buy, and narrow it down, because there's so many different patterns and so many different ways of having a legitimate setup, and you can't be masters of all of them. But I've never made a lot of money in value stocks. It's always been in growth stocks. But sometimes it takes a period of time where growth might be out of favor for 8 months, 9 months, 12 months, a year. But they'll always come back. You'll always be able to find them.
So what's next for Roy Mattox here? What are your future plans, and what are you going to do?
Yeah, I'm really excited. My son Wesley is a CFA. He worked for a company, Wolf Research. He's got a CFA, CMT, and we're going to be working jointly. And really, that's it's what a great opportunity it is for you to work with one of your sons. So I'm going to enjoy that for the next 10 years. But I'll never get out of the market. I'll never stop trading and never stop trying to make a difference for my clients, and and make them more money. That's really what I'm focused on now. It's to help my clients navigate through the current market environment and the future bear markets. The bull markets will take care of themselves, and fortunately I've been 90% in cash for six weeks or so.
Right. So what would you recommend new traders, or how long do you think a new trader should try their craft before they try the USIC? What do you think?
I think it's a matter of, anyone can do it. If you got the money, why not try it? But it took me about I think I was 29 when I got into the business, as a stockbroker. It took me 5 to 6 years before I figured out actually what was going on. It took me 5 or 6 years. And then it took me another 5 to 6 years to really make money for my clients, really know how to make money for my clients. So there's 12 years. And then, the next 10 years, then you're able to make a lot of money. And then, the next 10 years, you can be financially secure if everything goes right. Mindset is important. When I made a lot of money in 1998 to 2000 with the internet bubble, I felt like it happened so fast that I didn't deserve it. And where I did deserve it, but it happened so fast, and I thought that I was God's great reward to America for being this wonderful trader. And it was so fleeting. But now I know I'm worth it, and now I know that all the effort will pay off, and and you'll be rewarded. So it's all between your ears. It's mindset. So
so talk to me more about the mindset real quick. I mean, what is your routine to stay positive, and even when you're having a drawdown perhaps, and just how do you keep your mind right? That's a big problem for traders, I think.
I think it's to try to limit your drawdowns. And I used to, back in the day, that 2000 to 2002 day, or 2002, and that 1998, I used to have the buy signal, and I used to call it the tummy indicator, where I'm curled up on the couch and in the fetal position. And I don't get into that situation anymore, because because I'm trend following, and that gets me out, that keeps me out. But, it's just learning, it's learning, it's learning so that you realize that every bad trade's not fatal or final, and you're going to have a number of those. The great traders were right 50% of the time, at best. And, just like the great baseball players that bat, 300. So in a great trendy market environment, I found that I'm right, 8 times out of 10. But in a choppy environment, you get chopped up. And again, you have to understand where you are in the market. And it's just part of the game. It's just a part of the learning, process. I haven't read Mark Douglas's book. I'd like to read his book, I guess, Trading in the Zone.
Trading in the Zone, it's a good book, yeah.
When you're trading in the zone, you can visualize things. Everything seems to work. Everything sets up.
Right.
And that period of, when you're in those periods of time, that's really where you go for the jugular.
Yeah.
You go for the jugular, and, from that 2020 top, where I called that top. And then when you got in at the beginning of the new bull market, I believe that was, the market bottom March 23rd, and the follow through day, I think, was April 6th. And then, it was so easy. It was my year in that year was much better than the year that I had last year, but it was very, very easy. So if you had, if you manage money the whole year, that year, it should have been a triple digit year.
Mm-hmm.
And so you just have to understand that there are going to be times when you should be going fishing, playing golf, reading books, and we are sort of in an environment like that until the environment improves. And I was reading, what do I have here? Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. And I think I just think we've been in a situation with quantitative easing where it's been extremely bullish, and the market's been in a bubble, and it's important to not have any drawdowns from here. It can go a lot lower than you think. And I was having a conversation with John Roque, who's a buddy of mine. He's a great technical analyst. And we were talking about it. And even though there's been this major drawdown, there's been a drawdown on the FFTY of 30%. Most stocks are down 60%. But you don't hear people are still, I heard a guy on CNBC the other day said he's buying with both hands, like I'm buying in both hands. And so that, when you have that going on, it suggests that we're not at the bottom.
Yeah. I spoke with some parents. I have a bunch of kids, and they're all dip buying. They look like they're going to puke today. I was talking to them. So just a lot of signals like that. Like, they might have used up a lot of that buying power on the way down. It could always go lower, like you said, right? You just never know.
Yeah, you'll find people on Twitter that, particularly with the meme stocks, that they're saying that, yeah, I'm buying it all the way down. I'm buying more and more. If I have to, I'll mortgage my house. You saw what happened with MicroStrategy, right? That stock dropped from 1,200 to 230, 260 today. Right. And, he's got his whole firm in Bitcoin. Anything can happen.
So your main sell rule, I don't know that I got it. The main sell rule, you have a maximum stop loss, or what do you use?
If I'm trading my personal account where it's very, very short term in nature, I'll sell a third when I'm down 3%, a third when I'm down 5%, and the rest when I'm down 7%.
Okay, so staggered stops, and that's something that people should kind of look into as a option.
I've got several of my trading buddies, if you will, where a couple of guys that have been trading, like I have 35 years or so. you know, they affectionately know me as the one bar stop guy. Like a lot of times I'll buy a stock, but I'll use a one bar stop, the prior low of the day before.
Okay.
If the stock turns, so if you're buying a stock that is coming in at support and then it turns up, you know, I might put the position on right there, particularly if the stock is pulling back, like in that early cheat leaf that you were talking about.
Yeah.
So that's really what I'm looking for. I mean, I'm looking for those stocks that are trending up, you know, that are in a stage 2 uptrend, that come into support, and then they turn up, and then you can use a real tight stop with size. But you can't do that managing other people's money. You can't move $50 million around like that. But you know, that's great for the retail trader.
Yeah.
So you're stopped. Now, what does that mean? It means that you're going to be stopped out. You're going to do hundreds and hundreds. I mean, I did hundreds and hundreds of trades, but you know, I'm looking to position I'm an intermediate investor. I'm trying to find those, you know, those stocks that are up 10 to 300% in volume that go up, you know, 150 to 300% in 18 months. Mm-hmm. So I think what you're seeing here is it's you know, it's obvious that, you know, we've seen the statistics where the probability is that 80% of true market leaders, the probability is they correct 50%, and the probability that 50% correct 80%. And you're seeing that right now, and they don't have to buy them all at the same time. And that's just the environment that we're in.
Go ahead.
Last year, it was so difficult of a year because I took a lot of, like managing money, I took a lot of smaller positions, and I had a rule, you know, where you don't want to lose more than 1% of your of equity in the trade. Of the
account. Okay, yeah, I got you.
Of the account. And I just had a lot of those that did not work. You know, I widened my stop, and typically, you know, I would put 5 or 10% in the position, but the environment wasn't that conducive. And so I'm finding that I'm having to address that right now, where I want to, you know, I'm waiting for the setups patiently, taking bigger positions, and I'll have very tight stops. But you have to do that depending on what's happening. You have to adjust to the environment. But I don't like to trade like that personally, or you know, for my clients, you know, short term. I'm not interested in doing that. It's a grind, you know. It's a grind.
So what was maybe your best trades that you remember from the contest? Just which stock symbols, and I don't know if you could bring some up or anything like that. But
it was Roblox, Upstart.
So you did the earnings gapper on Roblox then? Okay.
Yeah, let me pull that up. So
sure. Upstart, yeah, I traded Upstart, and you know, usually you get a lot more juice out of these things, but Upstart, I think maybe 15 to 20%, and then I'm selling and getting out of it. I mean, it's just was not that easy of a trend for most of the breakouts this year.
And notice, are you seeing Upstart on your screen, Leif?
Yeah. So
notice, see, there's the breakout. Look, there's the breakout on volume right there. And it was earnings that 18 million shares, and the earnings were 1,000. Earnings and revenues, look, it was 1,000%.
Right. And
now the market at this particular time, and I did play it like day 2. And I think I probably I bought it 8.11 and sold it 10.14. 8.11 right there.
Okay. Yeah, that's
okay.
That's
on the breakout, and 10.14. Right there.
Sold it into that strength. That's good.
Yeah, sold it there, and I was trading around this whole core, but I was going back looking at all the trades. You know, intraday I was maybe adding some, taking some off, but that's where I exited the position right there. And now I was not the market environment wasn't so friendly. I mean, I didn't have a lot of shares of this stock at all for myself or for my clients because the market environment was unfriendly.
Mhm.
And I think that I think I bought this stock back. I think maybe on the pullback. I bought the stock back on a pullback and owned the stock. Yeah, I bought the stock right there at the 50-day. I thought they were going to have great earnings and the opportunity was going to present itself, and it got hammered the next day.
Oh, and that was in the contest. Was that still in the contest?
It was, I believe. Yeah. So you're going to have your ups and downs. But
yeah. So he takes losses too, just like everybody else, right? I mean, that's
yeah,
you get caught once in a while,
Yeah, in fact, that was my biggest loss last year, and this was a big loss of mine too. This FUBO. So this will sort of show you the perfect example where I actually bought this, breaking this downtrend line. See right here,
Okay.
Leif, see that?
Yeah, yeah.
And so look at it broke the downtrend line, and they had this is the company that provides live streaming, streaming for sports programs and so forth, ESPN, etc.
Yeah.
And it broke the downtrend line, and I bought the stock. And this is another one where it happened to crunch me. This is and I had a 10% position in this one. I had a profit going into the number, and then I sold it that day where the stock just inexplicably just got crunched on the number. I mean, I don't like to hold these stocks into earnings, but I had a slight profit, and then that got hammered. But it had the really what I'm looking for on the breakout, but I just didn't have enough time. It took a hit. I took a loss there. That was
you got your base, you got your tight area, you got your pivot with a diagonal break at the same time. So you got a lot of confluence there above the moving averages. So I see that. I actually took that as a high tight flag sort of trade in, I think that was in November, December. That was 100% move in 4 days. The original one.
Right back here.
That's when things were real easy. You just, read the volume right and get in at this right spot.
And you had a lot of that speculation that took place back then. And I can't remember, but I traded a number of SPACs a year ago.
Yeah, me too. Yeah, that was, I wouldn't touch them now, but then, that's when I'd do a 7-day high tight flag and a SPAC and it would work. If they work, then, that's as low as I'll go, but only if they're working, obviously. So.
Right. And there's the Roblox breakout. And then this was interesting because
the earnings gapper basing, IPO base, and it's got the formula, but I think just the air came out of the high PE names after it made the move, right?
It did. And but that move, there's your move right there. You had a 40% move in 2 weeks. And the breakout there, and just wide and loose.
Yeah.
But I did trade this. I traded that one. Let's see, AFRM. This was had the same signature. And notice, Upstart, Affirm, these are IPOs. So there's. As this stock goes through as these IPOs, and it could be DoorDash, it could be ABNB Brothers, it could be a DigitalOcean. There are a number of these IPOs that have very long-term prospects, but you need the signature breakout day, volume where the institutions are piling in on it. And this was actually this happened to be one of my worst losers and one of my best winners, where I actually bought this stock. Let me see. No, actually, it was Upstart was one that I identified early, but then just got stopped out. But here's the signature on Affirm, and bought that at 8:31 to 9. 8:31 right here. Bought it day 2, right after the explosion in volume. And then the sell date was 11/9.
Okay, so you held through a little bit of a pullback to the moving average and rode it up still. That's
on that break right there.
okay.
So yeah, so I mean, in a great market environment, Leif, this 21-day moving average, like if I like to use that 21-day exponential average, and really 2 days below a close from a short-term trading perspective, a 2-day closing 2 days below that 21-day is that low is an exit signal typically.
Okay.
And particularly if it's been in an uptrend, if it's been an uptrend, shorter than 7 weeks. If it's been longer, if this stock has been trending up for 10 weeks or longer, that 10-day is a good exit point from a short-term trading perspective.
So that's one of your violations is 2 closes below the 21 EMA. And do you have any other kind of violations you look for, just so we could kind of condense it into one spotlight?
That it depends on the character of the stock. So I look to see, ideally you want the stock to, if it breaks out, you want it to hold on the 10-day. I mean, I see a lot of short-term traders even use the 5-day. Do you use the 5-day?
No, I don't. I use the 8 EMA as the faster one I use, because I mostly trade on the daily. I'll look intraday just on the entries.
Yeah. So, I'm looking like the great winners. I mean, they are real strong and they don't violate the 10-day. There's so many of these that don't violate the 10-day. Here it violated the 10-day, and it kept, you could have bought it at the 21-day. And so that's really what I'm looking for. I'm looking for these stocks that break out, that don't even violate the 10-day. That's really what I'm looking for. So it's just the character of the stock, but I am looking at the 10-day EMA and the 21-day EMA too. On a pullback, that we're in, like right now, for example, that SIMO, I was looking at that. There's a stock that broke out on volume, and this is it's a semiconductor stock that's in the memory area, where it's pulled back here to the 50-day. And so I'm wondering, that has a lot of the characteristics, decent numbers, but it's got a lot of the characteristics, but it hasn't come in that much, so it's right at the 50-day. So I'm wondering if this stock is going to shake this off and be a potential new winner.
And how close will you buy? I mean, I think you've bought before earnings before, but I see it's in 2 days. I tend to stay away from that because it's kind of hard to get that cushion.
Yeah, I mean, I just showed you the 2 biggest losers that I've had, and that was holding into the number.
Right.
So even the pros do that when you're, even when you're convicted with the idea, and and you got a big position there, even when you're convicted with the idea. And those are 2 examples that have, those are 2 of my biggest losers. I think Snap did the same thing. A couple of these, like, it's funny how these stocks looked great. See, there's Qualcomm that had the characteristics, see where it broke out.
Right.
But so Qualcomm, and look at this stock and what got me fascinated, and I bought Qualcomm. Look, here's the monthly. This is a 20-year base. Brobdingnagian base right here.
Very nice base. Yeah.
Base. It's just really started going again. And, but there it is. There's the characteristic. So
would you say that top is a little wide and loose? I mean, to my eye, I think it is.
Yeah. I mean, it's just, if you got in this position, and I bought this stock too. I bought the stock, and this is one that I bought when we had that follow-through day.
Right.
And that must have been, it was right here. See where the stock is going, and then it gave it all the way back in one day. And how do you trade that? It's untradeable.
Right.
AMAT, look at this AMAT chart where it was holding up, made a new high like a potential leader, gave it all back that day, closed at the low of the day, reversed it, closed at the 52-week high the next day, then gave that all back the next day. Look at that action right there. That's just totally,
Volatility, right?
Volatility. Yeah.
Not for low risk trading. I mean, that's where I stay away. Kind of wide and loose areas, and that's sell a violation. That's what we're looking for. We're trying to, we got to learn all the violations and what you look for.
Yeah, so I'm just looking for stocks to set up. There are many trades, but they're not great.
Yeah,
they're not great setups. They're not great setups.
This one was setting up okay, and that was a earnings pre-announcement, right? That's what that was.
Yeah. So but you wonder if if these stocks are peaking with peak shipping rates, and so that's what makes it questionable. And the leader in the group, we'll pull up ZIM, but man, look at these numbers. Leif, 300% earnings growth, 300. I mean, these are huge numbers.
How do you read the relative strength here coming into the year on this? And if we start basing and setting up, I mean, is this something you're interested in then?
Yeah, I mean, you have to be with these numbers. They can go a lot further than you might think. So if this stock tightens up and then comes out and takes out this 93.17 area, then this is the potential. You will get a follow through day, and this stock's going to new highs. This is something that I might own. Probably would own. I mean, I'm watching it. They pre-announced. You got that risk out of the way. It is a little bit wide and loose, but if it can break out with the follow-through day, that would get my attention. So, the leader has been ZIM. Yeah. And ZIM was a 52-week high 4 days ago. But look, or is that the top peak earnings? Or, is that the top in the stock because you got peak earnings?
Or is it the market? I mean, that's yet to be seen, right? That's what you're saying, right? Okay.
Yes. Or is it the market? And look at the revenue and earnings growth. I mean, these are huge numbers. Back in 2007, you had the fertilizer stocks that really had this tremendous move. And this stock actually broke this downtrend today.
Right.
So that's giving you an early entry. But with the market environment like this, where's your stop, right? Yeah, I mean, your stop would be below today's low.
That's
and
huge.
That's $5. That's a pretty, if you didn't get it exactly right, that's asking to be stopped out.
This came up on my screen today too. It's interesting you brought this up. I mean, I think a lot of people are focused on this. So for the follow through day, I guess you're looking at this MATX, ZIM, maybe see if they turn around, right? See if they're tight, and you can risk manage, right?
Yeah, look at the move in CF in the it went up tenfold, 2005 to 2007, and great earnings. And this is a huge breakout. This stock is breaking out of a very long base right here. So does this have legs or not? I mean, this is an important breakout. And they got the numbers, the numbers are there. So, do you buy a couple of these that don't meet, they have the earnings profile, but they don't have that typical growth profile, but the numbers are bringing you there.
It's the new growth. And what do you see like when we go into energy? It's like kind of the last group that's working. I mean, how do you feel about that? To me, it gives me a signal. What is it? But what's your signal for that?
Well, I owned four of these, and I got kicked out a few days ago, and I own FANG, and so this FANG. So I sold this 4 or 5 days ago when it reversed, because this was the only I had a profit in it, and I moved, and I just took it off because I didn't want this to happen, a profit that turned into a loss. I didn't know if they were going to come get the group.
Yeah.
But it had great, there are 4 that I'm looking at. Diamondback Energy, but great earnings numbers, fantastic earnings numbers. Matador Resources, MTDR, and I own this, and I bought this at this probably low cheat area right here this day, right there. You've got the crossover in the averages, and it broke back above the 50-day on that day.
You like more of a 50-day pop kind of combined with some kind of a tighter area on the end there. Yeah.
I'm just watching it. I am definitely watching it. And then PXD I viewed as a big winner, but a lot of liquidity, big winner, big numbers, and then they rolled over. So I don't know where. I don't think anyone can tell you. I think I've heard people. Kyle Bass was on CNBC the other day, and he said there's no way that oil's not going to hit $125 a barrel. I don't know where oil's going. I don't know if there's a supply imbalance there. I don't know, but it's the last group, and they're getting the last group. And so, they have, this is a leading group. The banks were a leading group. They came and got them. These aren't broken yet, but you're going to have to go sideways. Are you following that group, Leif?
Which one? The energy? Yeah, I did a video with Matt, but banks and stuff. Yeah, we were looking at those, and I was watching JP Morgan and Goldman, and they rolled the 200-day. I was looking for a short setup on the 200-day, but it just took a dive. So there's nothing to do there.
Yeah. Yeah. So, this was a leading group. I think this was, it was fourth. This was, I think, fourth. The oil and gas groups were, 1, 2, 3, and 4. Transportation was up there. And then JP Morgan reported, got hammered.
Right.
And now this is, the yield curve is flattening. So that's kind of what's going on. They missed, and then you're seeing an unfavorable risk curve.
Yeah.
That's what can happen. And that's just a volatility. Goldman Sachs was the same way, was leading, big stock leading, then this happens. So that's the volatility and the rotation that is just, it's been unbelievable in terms of the volatility.
At the beginning of the year, they were buying these up, and then they just pitched them. I mean, it just maybe shows we're in deeper trouble than we think. There's nowhere to go. We go to energy, they're selling that. They were bouncing some stuff, but that'll happen along the way lower, like you said, right?
Yeah. So now this is interesting. See, the consumer staples say this was leading. Now they're rolling this. So they might have, but we had, quote, what's known as a key reversal day today. And, so the safe stuff sold off, from the peak right there. People were hiding there. But that's sort of rolled over. So it's going to be interesting to see if we have some kind of rotation.
Yeah, I mean, maybe that's even a little mini Head and Shoulders, or at least the spirit of one up there, right? I mean, it's not exact. I mean, everybody says, oh, it's not exact, but it's the spirit of one is what I say. I mean, I don't know. Do you see that too, or no?
I do.
Okay.
I do. What I'm really looking at from a short perspective is if I see a lot of these stocks that are highly valued, and remember back in 2000, 2002, the NASDAQ corrected 78%, and you had a lot of stocks that went out of business, and companies like Peloton, PTON, companies like this that are weak like this. And, there was a rumor that they're cutting production because of lack of demand, a $9 billion market cap. Companies like this can get cut in two from here. This is when the shorts pile on, when you have the break, the stock is technically weak. You get a disappointment and they pile on, and then there's another disappointment. See, I don't even think this shows, okay, 20, it does show there's the bottom. It was down 20% that day.
Wow.
2 days ago. So those are the most vulnerable, but I think the high price sales stocks, OKTA.
You're looking at high price to sales and not just the price to earnings as potentially the ones that they take out of the market. Yeah. Okay. I got you.
Price to sales. So, here's a stock price to sales, they're doing 79. about $1 billion, market cap's 30, so a 30 price to sales. That look, that's broken the averages, and you're in the downtrend.
Yeah.
And you know, a stock like this, you know, you rally, you know, that you short this on any that's broken, you short this on any rally.
Yeah.
And
A lot of bouncing rolls going on, right?
Yeah, look at that. And see, there's that 50-month up 140. So there's a potential, you know, 20% trade, you know, from, you know, on, and, you know, and what you would look for here is you can see the 21-day, that's where it's been bouncing to. So the bounce up to the 21-day, 206, you know, you get a rally, a short short covering rally in the next 2 to 3 days, and you bring this back up there, that'll set it up to be shorted again. So, I mean, Snowflake, and I understand this is the fastest growing software company, you know, in the world, but an $85 billion market cap with $1 billion in sales.
Yeah.
I mean, this is ludicrous in terms of.
I'm right there with you. I'm short the name, actually. I covered some this morning too. So
did you? I mean, so, you know, so you're going to, I mean, you turn around and you see the prior low down here at 184. See, that's where these stocks, you know, you get, this is in a downtrend. You short every bounce.
Right.
It's just, you know, is it going to stop at the 10-day, the 200-day, or the 21-day? But you get a short covering rally. Now, we had this key reversal day, but, you know, you got to be careful that you don't short too early. But it runs into resistance. And, you know, those are the kind of stocks that can really, you know, implode.
You're pulling up my other short. It's not really going anywhere here. We covered some this morning and popped, so it's tough day to short, you know.
Were you short Zscaler?
I'm short this one also, yeah.
So you know, so what's that valuation? Doing $1 billion, a $34 billion market. Look at so this was a leader, and look at the top. Look at the reversal day top, the break. There's the perfect short.
That's the best short spot. The roll up there, you know, I got it lower on the second one, but I'm stopped to even move. It took some profits, but that's the spot for me. And I'm seeing the head and shoulders there too. I mean, but it's kind of, you know, jacked up a little bit.
Do you what kind of profit potential do you take on your short positions, Leif? How long do you keep the short on if it's working for you?
I'm trying to take that risk multiple of 2 out of it, and 20% or so, I'm probably closing it, because, you know, these things, they bounce, and there's other, you know, they always bounce and roll typically if they're a leader, or that could be wrong and the market just rips. So I'm taking what I can get, you know.
You know, it's interesting that the so-called many hedge fund guys stay short. I can remember, you know, Ackman being short. That what was he short? The drug stock. Was that Vertex? VRX, I think.
VRTX? Maybe VRTX.
I think it was VRX. I think, you know, back in the day, and he had you know, a lot of these guys that short, they're up in the position like 50%, and they never cover. I mean, most of these short setups, if you get 20%, that's a great quote trade,
right?
And, you know, and you're not. You know, I mean, that's, you know, rarely or is something goes straight down, you know, straight down 50%. They typically, just like these stocks, break out of bases and go up 20% and then consolidate. You know, many of the shorts do that as well. I mean, if you can get 20%, but they do happen faster. You know, these shorts work faster than from a time period than the longs do. You know, here's 20%. You made 330 to 250. There's 33% in 5 days, and it took you to make 30% here, you know, 3 months.
Right. So how do you avoid maybe risking a buyout or something like that, an acquisition when you go short? This is the main risk with shorting, from my perspective.
Well, if these high, you know, Zscaler's not going to be bought out, so. You know, CrowdStrike's not going to be bought out. You know, they're just too. Snowflake's not going to be bought out at an $80 billion market cap. I think it's the ones that are.
You're looking for bigger companies. The bigger the better, so they don't get bought, is what you're saying, right?
Yeah, yeah. So, and yeah, I mean, mRNA was, that was a beautiful. This gave you all the. I mean, look at that double top, the break right there. The 50-day. Look at that high velocity trade right there, 30% in 5 days.
Wow. Yeah.
And I think I was short a little bit of that for 5 days. I don't short in my client accounts. I can't do that. And I mean, I think 90% of most people that I know that are professional traders, they make most of their money on the long side because the market's going up 3/4 of the time. But you get an environment like this, and and then in a bear market, that's really, I'm wondering, how low can the market go? But it's, these setups are pretty, nice. But look at this. I mean, you have to be looking for this. So it's that's really changing your mindset as well, or at least being open to, situations like that. But, Leif, one of the things that I'm looking for right now, like from a short perspective, is you come out with an earnings miss, and from a new high, say the stock's holding up and then there's a miss, and the stock's got high relative strength. That's going to, I'm watching those carefully as well. Like right now, because a lot of these stocks are vulnerable. So if a stock comes and it's doing well and then it misses, that's going to be, I'm watching that setup as well. And I don't have any to show because that hasn't happened. I'm preparing for the earnings season.
Sure. Yeah, we have maybe energy stocks are at least near highs, but they're the only ones up there, but nothing like this. So,
but valuation. I mean, look at this Wayfair, and a lot of times you just have to be patient. But this market, this Wayfair was this stock went up 10-fold from the March 2020 bottom, 10-fold. But and the reason I'm bringing all this up is I'm studying it because I'm looking at, this is one that I attempted to short, and then the move didn't take place until the environment changed the last 3 months. And Restoration Hardware. So a lot of times when you just forget about it, I mean, I was trying to short this one, but look, it's the last 3 months that things have changed. So there's your downside. See, Restoration Hardware, and I know retail's off and business is off. The downside's 286. I mean, that's 130 points from here.
right.
And 286, if you look at it now, look at what it looks like on the chart, that's way down here. So look at that. Look in that downtrend. Look when it crossed over the downtrend. I mean, this has done nothing but go down. But the short covering rally could take it back up to the 21-day, where in the next 3 to 4 days, and that's setting up for a short again. So the ones that are broken like this, that last 20%, I think there might be, depending on what happens with this market, there can be some great opportunities there to short these. The big winners that went up 10-fold, 80 to 800. I mean, up 10-fold, in a year and a half.
So those are the big moves to the downside short. Do you have any ETFs you're looking at to maybe that might bounce and roll or something like that? Maybe home builders, ITB, or I mean, these are kind of all over already, but
yeah, I thought that this was a group that potentially had legs, because there's a big there is a secular ingredient to home building, and that's the number of home buyers that are in the sweet spot, the Gen Zers and the Gen Xers, that and from my research and study is show me that I believe that home prices are going to rise about 5% a year for the next 5 years. So now most home here in Charlotte, I think home prices were up 23% year over year. And they're not going to do that for, they're not going to do that another year, but the rate of change is going to slow, but the secular move might be there. And, here's, I mean, when you look at the home builders like DH Harden, this is a long-term monthly chart, and Lennar. And these things are just breaking out of what, 15-year basis. So this is, this could be, I thought that this potentially could be a leading group, but in the last month, they've rode them over. But
KBH had one of your earnings gaps there, but I think that failed, right?
yeah, exactly. So KBH, look at that. Look at how it failed. So right there. So that was either the environment's not conducive, or or rates are going higher. And so that's a cross current of information there. Where are rates going?
So maybe for a follow through day, are you watching KBH to see if you could find a spot? I mean, is it that would be one of them too?
Probably not,
No?
because there's so much overhead. I'd like to see it.
It's too low, right? I mean, you want it higher up in the base. Okay, I got you. Yeah, I'm not going that low in the base. I'm just saying for if it's setting up higher, you'd be interested because of the earnings gap.
Yes, and so I mean, I'm very interested to see what EXPE and Live Nation, what they do. Okay. I'm very interested to see what those companies do. But there's NVIDIA off the bottom today, and I mean, there's this is going to take weeks, if not months, to set up.
Right. Sort of.
Look at, I mean, this was one of the, look at the leader. Look at it hold that 10-day the whole way, and then it finally broke it. And then, and this is one that I did play on the short side as well, a couple of weeks ago.
Yeah, I looked at this one as maybe crossing. Is that the 21 you have up there? Is that, or the 50 is the red? Which one's the red line on yours?
50 is the red.
50 is the red, yeah. So that we're breaking that with a little ledge there is kind of a spot I might take. Yeah. And
and the idea that it was that everybody was talking about it, and everybody, I mean, this was the number one. This was one of the last remaining true market leaders, right? Until just a month ago, this was it. Well, you had, and by true market leader, I mean a company that's got tremendous liquidity, and a company that's got tremendous numbers, and the companies and the stocks making new highs in price. Because Fidelity, they've got to, Fidelity has, I don't know how many mutual funds. So they have to, for them to buy a meaningful position, you got to, they've got to buy hundreds of thousands of shares.
Right.
And we don't, right now, we don't have anything out there it's just places to hide. It's, the market's been moving around with the algorithms. We don't know who those true market winners might be. It might be, if this, it could be still oil. It still could be oil. The group is still, there's the group. So they're the, look at the oil and gas. Look at this. Man, this is just a plethora of ideas. This is the leading group. I mean, look at this.
So on a follow through day, you might want to grab an energy name.
Yeah. Okay. If it's acting
right. It's set up right. I got you. Okay.
If it's set up for sure. So you got oil and gas. There's the transportation and ship that we talked about. There's ZIM. There's that MATX that we pulled up. I'm not going to be buying a bank. I'm not going to be buying a supermarket. That's a place to hide, right?
Right.
I'm not buying Kroger. And there's the fertilizer. See, chemicals, fertilizers. That's a top 10 group. I'm watching to see what groups were we're under 40 that are moving up. That's really what I'm watching. I mean, I'm watching this TCK, Tech Resources, just the mining in the mining group. What's Tech Resources look like? See, look at that TCK. See, this is where what's not to like here.
Yeah, the RS line's great. It's got oil in it, right? So it's a good deal of oil. Actually, we went over this with Matt Caruso. Actually, it doesn't say that on the top, but it's got coal, right? And the metals are setting up, so could be a leader there for sure.
Great numbers. And look, the stock. Look at this VCP pattern. Look at this.
The pattern was great. I almost bought that, and
See Leif, what happens, you get a pattern, you get something like this that's an old stodgy name that hasn't had explosive moves in the past, and you think that it doesn't have much upside, but it's not the upside. It's the idea that it's perfect and that the trade might work, and it could, you can get your 20% move. Where's your buy point on this stock? Like right in here, right there.
You could probably go as low as that, or slightly to the right, a few bars, 6 bars to the right, somewhere in there. A little downwards drift, and then the turn up. Always buying the new high over the day before for me. So
right there. So right there, would you
something like that? I have considered that one as sort of a little pivot reset, sort of comes out in and checks up, and that's a very much a VCP type of thing. But I'm just worried about the average true range coming in, and that'll always probably be a VCP or cup and handle or something like that, or W. I like W patterns. The undercuts on the end are really great because it shows, everyone's been flush, then a reset. It's always good stuff,
Well, that, to me, I'm in total agreement. Like right there, now it's coming to the 21 days. So if it's the real deal, it's going to hold the 21 day and move up from here. So, right. I would not want the stock to break today's low on the reversal. And I wouldn't buy it at the 50-day. I would consider it, okay, it was just another fake breakout, false breakout, that where you're leaning there, and either the stock's not ready or the group has put a short-term top in. Fertilizer, there's Mosaic fertilizers, so we looked at that. Oh, MP Materials. This was one that I was watching because they're in, that rare earth group area. And, China's trying to put a lid on all the rare earth minerals in the world. And this is the only company that has a mine, I think, in the Western Hemisphere. Yeah,
I was looking into this. It just got a little erratic there. It wasn't a good spot, and then it dropped out. The weekly was really nice if you check the weekly on that one too. But how do you feel about everything getting more expensive with all the mining and the oils and all that stuff? Is that at the expense of all the other stocks? The consumer gets strapped, and they spend less on everything else. Maybe. Do you have any thoughts on that?
I think it's I think that these the shipping companies and the miners and the commodity companies are going to raise prices. So there's obvious tremendous demand right now that hasn't, and the pricing hasn't shut off the demand yet. At some point, as we know, just supply and demand, there's going to be a reaction at some point, and that point may last another 3 months or 6 months. From a standpoint of putting these trades on, I'm just looking for a low risk way that you can make 20% on a trade over the next 90 days, the next 30 to 90 days. If you happen to get it right, it can happen in 3 weeks, but the market's going to have to cooperate. So it's just a matter of constantly looking the way that we're sort of going through this and looking at the charts to see what's holding up, what has the characteristics that you're looking for, and then just simply going through the stocks. What So really and just one by one, here's.
Yeah, your scanning techniques, and I use the Minervini's trend thing here for sure, because the count tells a lot too. I see 19, and then the 5-month trend template showed 200 something yesterday, which is down from 600s, which tells you stocks and uptrends. And this uses sort of the, just uptrend. I add a lot of filters to get the ones I'm looking for, but you're looking at the number of stocks and uptrends. Near pivot do you look at that too, near pivot? And
right.
yeah, see, if there's nothing near pivot, I mean, obviously we're in bad shape, right? So,
and
what are you looking at? Yeah.
And so there's 316 names today, I see, and
so some pop back up. So right.
Yeah, and so what's so nice about the screen, and I started watching, and this is really new as well. So for me, because the trend template Marketsmith only added it in the last year. So, this wasn't available. Of course, Mark, with his private access program, he's trading off this trend template. But I do know David Ryan likes to use this 1 month. And by, the trend template, it's a qualifying screen where the criteria is such that you're looking at stocks in a stage 2 uptrend. And the difference between the 1 month is that 200-day moving average is turned up 1 month from
right.
And then the trend template of the 5 months is that 200-day has been in an uptrend for 5 months. But the qualifiers are, you want to see the stocks that had a 25% uptrend that pull back, and where the 10-day, where the 50-day is above the 150-day and the 150-day is above the 200-day. You want it to be within 25% of its 52-week high, and you want an earnings per share rank typically of you want a relative strength rank of over 70. Mm-hmm. And so that's going to force you in, the stocks that are only in stage 2 uptrends. So you're not going to be buying stocks that have gotten hammered, something right. that's down 60 to 70%. It's stocks that are in stage 2 uptrends. And I'm spending a lot of work looking at these screens right now.
Do you dial this back even more? Like, I prefer the higher RS names, 90 plus when things are great. When it's a little tricky, I'll go in the 80s, just thinking if they move, they'll go to the 90s.
Right.
What are you looking for? And I'm $5 and up, but what's your screening criteria? What does that look like?
Well, the higher, the better in price. Okay. Higher, the better in price. The higher, the better in relative strength and with the composite rating. But I would look at the relative strength. Mm-hmm. I'm not interested really in any stock that's really under $30 in price, because I want to buy, I need to have liquidity in them. Right. But, and then I'll go through these names with my space bar, and just go through them and just look to see see what the numbers are, to see what they do, and just one by one. And I can see that, Qualcomm's the only one right here on the screen that I would be interested in so far. There's a ePay, they were bought out, Teradyne, potentially, and just go through them, like that. How about you? How do you screen these?
Oh, for those, I mean, the 1 month is, for me, it's more about timing. And I'm looking at this for kind of overall, just how many stocks are in uptrends. And I'll use a combination of, I'll go 90 RS, 80 RS plus, and it'll get the list a little smaller. You can cut certain groups out. If it's a utility or something, or a REIT, I'm probably not going to trade it just to make things easier. And then, I do a lot of other technical screens where I'm looking at the average true range coming in, which is like very much like a volatility contraction, right? I was doing that before I heard about the volatility contraction pattern. That's kind of the same spirit of it, right? You're just having a tight area on the end, and it goes back. O'Neill has tight areas, and all that stuff. So always a tight area, uptrend base. We're looking that I'm just trying to get in the strongest leaders, and that's why I always ask, how do you define a leader? And you're looking, obviously you're looking at leading groups and stocks and uptrends and the earnings. So I think we're getting a clue how you do it, and it's really putting together all these methods from what I'm hearing. So
do you get, well, Marketsmith doesn't provide average true range. Where do you get it? How do you implement it? Do you have another screen with the?
Yeah, I have a technical scanner. I can do it with a few different programs, but I use stock charts for that. And you just want the average true range of the 14-day range to be coming in. You want it to be less, and you can sort of say what percentage you want it to go down. And you can even have divergence of on balance volume going up while the average true range is going down. And there's a lot of stuff that you can use to achieve these results, and then use all those scans, all those criteria, like you were saying, like that goes back to Weinstein with a, stocks in uptrend stage 2 over the 200-day, 1 month, and all that. So it's all good stuff. So it's, everybody can finally adopt their own style out of all that, right? I mean, some people will, they'll find what they trade the best too. I find, certain groups. I talked to Matt. He loves energy and metals and stuff like that. So.
So,
yeah.
I mean, look at the groups over here on the right. So insurance companies, there's some semiconductors, transportation. So these aren't high growth IBD 50 type stocks.
Right. Yeah, and the IBD 50, I think David Ryan says he uses it more for an idea generation type of thing because they switch them out so much. So.
Well, this is the turnover in this. It's 1,000%.
It's huge,
and
right?
I have this. I watch this because all the great market winners are going to be on this. They're going to show up. I mean, 90% of them are going to show up on this list.
Oh, sure.
But this list is changing. I mean, the turnover, it's 100% a week. 100% a month for sure. And, it's quantitative, it's proprietary quantitative, but, the turnover is enormous. But I mean, normally I'm looking, at a lot of these groups, a lot of these stocks, because the ones that we mentioned before, like Square and Teladoc and Zoom, they were all on these lists. There's a good chance that some of the, a few of the true market winners are going to be in some of these names. So I'm constantly looking at this on a weekly basis.
Yeah, it's a great spot to find some leading stock that you missed or something like that, or just to start, right? I mean, you want to start there almost.
Yeah, this is one of the stocks that I bought on the follow through day earlier and got kicked out. And, this area, and the companies that are in this group are there. You got Juniper, you got Cisco, ANET. There's an earnings report. That's why it was on my list, and that's why I bought it on the follow through day, whenever that follow through day was, a month or so ago, and now it's failed. And earnings are in 21 days, but the numbers are decent. They're not explosive, but this is a group. Look at this VCP. Look how tight this is.
Very nice. Yeah.
So, there could just be a rotation into groups like this, out just a more stable build out, on the internet, where the routers are being replaced and some other technology, and the data centers are being upgraded and so forth. Whatever reason, this stock is the company gave good guidance, and they're growing at 20%. So, in a market environment like this, 20% is pretty good. So I'm watching this closely to see if it can, build a base and come back and reclaim the 50-day as well. But that's what if the market environment was better, that's exactly what you want. And, you want a company like this to break out on volume, go sideways, pull back a little bit, and then make the turn. That's that's an ideal situation. So earnings are going to provide that for us, I believe.
All right. Well, I mean, hey, I don't know how much more you want to go. I mean, you're a total warrior going for almost 2 hours now, so we could definitely got a lot to work with.
Well, good. It's been a pleasure visiting with you, Leif, and congratulations on your success.
Oh, thank you. Yeah, if you take down the screen share, we can maybe do a exit thing here. Just in case I didn't say it before, I just wanted to say, congrats to everybody that was in the contest. You know, Mark, Ryan, Pavel, you all the top performers. I'm missing a whole lot of people, but you know, that was a very difficult year. So congrats to everybody that performed in it, and I'm sure everybody learned a lot. And big thanks to Roy here, obviously, for meeting with me. I mean, he's a total warrior. This is over 2 hours. I had to remind him; he didn't even know, so he just kept going. So we had a lot of stuff here. we're gonna have to probably do a two-parter or break it down here a little bit. So
we'll definitely edit it. And again, congratulations. And I just want to say for you know, to Mark and Jay and Oliver, Ryan, Matt, Anish, John, Brian, Jack. Those are some of the people that I follow, you know, on Twitter. That and of course you, where you know, your insight I think is invaluable. And you know what makes social media so great is there really is just a small group of people that have a great camaraderie, that are looking for just to help, you know, to help their clients build their wealth, and you know, to help each other become more successful.
Yeah, and my big challenge to everyone is to just push each other. What are we doing new this year? What do we improve? You know, one of the things that I think I got everybody on was IWO this year versus IWM. Yeah. The IWM is the IWN versus plus the IWO, right? And then you take the value out, then you have the true read of kind of growth. And, you know, it's just little things like that. You know, no one makes any money doing that, obviously. You know, just the good ideas, put them out there. Let's, you know, Roy's out there now, and I see his Twitter, and it's already valuable to me and everybody else. So definitely give him a follow. And thanks so much, Roy, for joining us.
Thank you, Leif. Have a great evening.
Hey, you too.
Bye-bye.